So today I'm going to talk about how my strategy works, what conditions it looks for when trades are entered and exited. So this is a video that's going to help you understand the workings in the methodology behind the expert advisor that you're now using for free. So one big problem with Forex systems purchased or free out there is that so many of us bounce around from system to system to expert advisor from expert advisor, and we never land on anything. And the reason I feel like is because, well, one, it's not a very good system, or because we don't really fully understand how to use it, what the author intended, how they intended to use it, the methodology behind it, and how to be effective with those trading tools. And that's something that's a common occurrence in the Forex or just the trading world in general, is that we just don't have the knowledge or the understanding to use these tools effectively. And so that's why I want to explain to you guys how this expert advisor works. I don't want to just give it to you and for you to use. Well, I do, but I want you to also understand how it runs and what it looks for in the market so you can have peace of mind, or so you're not contacting me, oh, what about this drawdown today? Or when is the expert advisor going to take profit? Or why is it entering trades against the trend? All of that kind of stuff should be explained in this video. So we trade on three different pairs: the pound Canadian dollar 30-minute time frame, the Aussie CAD 1 hour, and the New Zealand CAD 1 hour time frame. And the reason why we trade on these three pairs is because they're all very volatile, which I look for, and they're also very rangy. And I look for a ranging market so I can take advantage of certain things that happen on these pairs. And I guess if you could say that if I were to say I was pretty knowledgeable in one pair, it would be probably the pound Canadian dollar. And the expert advisor looks for two conditions to be met. The first one is the RMI indicator. And if you don't know much about this indicator, it's very much like the RSI, but it goes a little bit further by showing you a better, more accurate momentum of price. And the settings that we have for it is when the 65 level, the RMI line, or the RMI, the momentum, goes above the 65 level, we look for shorting or selling the market. And if it goes below the 35 level, we look for buying or putting in long orders on the market with anticipation for an overbought or oversold condition. Now, the RMI is not very effective just on its own, and so that's why I use it in tandem with another type of indicator, which is candlesticks. I look for a specific type of candlestick pattern that helps us or gives us an indication of the market potentially reversing or having a pullback. All right, so in this condition here, market is above 65 level. So that means that it's obviously pushing up, and it has been. And you can see this very large bullish candle, right? The bullish candle is an indication of that, and obviously we're pushing up and it's pretty strong. But then we have an inside candle right after that. So that is a inside candle, complete inside candle, where the wicks and the body, everything is inside the previous candle, as you can see. So it's a two candle pattern that we're looking for. And after that inside candle, that bearish inside candle is closed, we look to sell the market. And that's what the expert advisor does. And it does it very well. It looks for it once the criteria is met. So above the 65, inside candle, full inside candle, and then entry on the next open candle. And you can see that this trade worked out very well. We look for 50 pips on each trade basket. So whether that's 3 trades, we take 50 pips total, or whether that's one trade, we also take 50 pips, take profit. So when the market gives us a really good entry like this, and we have a trade in and we take 50 pips, that's a really nice, clean trade. So sometimes we don't have as clean of trades like that, and I want to talk about the money management behind the strategy, so you guys understand when the market goes against us or we are in drawdown, and so you better understand how to handle that drawdown or what the expert advisor is looking for in order to get us out of that drawdown. Okay, so the push down, RMI is below the 35 level, so we're looking for long or buy trades at this point. And there is a bearish candle right here, made a new low from the previous multiple candles. Inside bullish candle, complete inside, including the wick of the previous candle, previous bearish candle. And the bullish candle is not very strong. It's not a strong candle in this particular case. There wasn't a huge push down and then a big push up. Sometimes that happens in the market, and the expert advisor looks for the conditions to be met, but it doesn't analyze specific how specific or how large the market or the volatility of the market is. It just looks for the specific candle setups and these two conditions to be met, and then it takes an entry. All right, so in this particular scenario, entry, price did go down a little bit. It went back up, but not enough for us to take profit. And then it went against us further. It went against our first order. So we look for a re-entry. We hold on to our first order, and we look for another re-entry. And the reason why we do that is because our first entry typically is very good, but there is a lot of potential support or resistance in these areas from our first original order that if we just entered 20 or so pips later, then we might be able to catch that movement that we were originally looking for. So in this case, 20 pips later, second entry, another 20 pips later, third entry. So every 20 pips against us in the market, we enter another trade with the potential for it bouncing at that time. You can see that it was a late bounce. We did eventually get it, and we came out with 50 pips profit amongst these three trades together, okay? So don't be scared when more trades are being entered against the market. Eventually, it will likely pull back and will come out in a profitable basket. Now, you may be wondering, well, what about stop losses? This is a non-stop loss strategy, and so that may scare some of you, but there are presets that I have, so let me know that I have stop losses, and the stop loss is very tight compared to the profit. It's a 75 stop loss compared to a 50 pip take profit, so it's almost a 1-to-1 ratio there, and it's very effective, profitable almost every single month. But I like using this strategy as a non-loss stop loss strategy. I feel like it's the most effective in that if used in that way. And so we have our three trades. They came out in profit. And you might be wondering, well, are we going to just have, endless amounts of trades if the market continues to go against us? Well, yes and no. It does. We do have an endless amount of trades that can be executed. But in most cases, over the last 13 years of my testing, there has been only, in most cases, the market will stay within a 500 pip bracket of I guess, price movement before our candle, before our system or expert advisor ends up taking profit. So the market will go against us potentially 500 pips in the worst case scenario, but then reverse or have a big, large pullback or trend change at that point. So the idea behind this is to find the market behavior with these pairs and to try to utilize that in tandem with my strategy. And so knowing that the market reverses within these 500 pip brackets of time, I can use that to my advantage by having a money management system like this. You might be saying, oh, you're just building your strategy to fit a specific market condition. No, the strategy is perfectly strong on its own with a stop loss, a tight stop loss by itself. It's just I choose to use it like this, and that is my recommended settings for you guys to use as well. So what do you do knowing this information? Knowing this information should help you understand when we're in drawdown, when the take profit may happen, and if we're in drawdown of around 500 or so pips, in the worst case scenario, sometime years down the road, then you'll realize that that's usually the time that the market is going to reverse and things will start moving into our favor. All right. Now, the idea is we can't always be profitable in the Forex market. No strategy is perfect. My strategy isn't perfect, but with 13 years of profitable history, that's good enough for me. That means that it shows me the strategy and core is strong. But some of you may be wondering about that stop loss. I need that stop loss. It's not a good trading system if that stop loss isn't there. And remember that Stop loss systems are still not protected. You can still have huge losing months with a stop loss system, even if it's tight, or if it's a tight stop loss, or if it's a larger one. You can have 10, 15 losing trades in a row with a stop loss strategy, have 3 winning trades right after that, and then another 10 potential losing trades in a row. What that would cause you with a 3% risk per trade is a multiple 30 to 60% loss on your account. So tell me what the difference of a non-stop loss strategy is compared to a stop loss strategy for those of you that are real strong believers of that. I want somebody to prove to me that that a stop loss strategy is better, and I will battle with them, and I'll have a little battle on how why what the difference is. Where I think that there's weaknesses to both strategies, but the idea is one is not better than the other. All right, so guys, that's pretty much it for this video. I hope you guys enjoyed it. And sorry about my stop loss strategy idea ranting, but I wanted to make some things clear to you guys with this video. And hope you enjoyed it.